Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer, Operations Manager for Wickham Financial Group, and I'm Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what's going on in the markets?
Yeah, thank you, Jeremy. Thanks again for our listeners jumping on another call. Yeah, we saw U.S. equities pause after a pretty sizable April rally, but they were mostly flat. We did see about a 2% gain in the Nasdaq 100. If we look at the leadership, we saw the Mag 7 participate, but the real driver was semiconductor stocks. They really drove the performance. On the oil price surge, we saw WTI, that crude jumped about 12% on continued Middle East concerns, on that supply risk. Rates and Fed expectations did shift as Treasury yields drifted higher. And the U.S. consumer data, the March retail sales jumped about 1.7%. That was the best in over a year. Housing resilience continued to be there with pending home sales rising about 1.5%, even though we saw pressure on mortgage rates rising a bit. Some economic activity expanded, so we did see the manufacturing and services PMI stay above 50. Labor market stayed pretty steady with the job market claims rising modestly, about 214,000. Nothing to really be concerned about there. We did see sentiment divergence, though, with consumer sentiment that fell near 2022 bear market lows. If we look at the global markets, they were weaker than the United States. Over in Europe, we saw Germany's flash composite PMI fall to about 48.3, and the UK's unemployment rise to about 5.2%, and their CPI increased to about 3.3%. So that's their inflation number, the consumer price index. Over in Japan, the core inflation accelerated to about 1.8. In Australia, their PMIs returned to expansionary areas. Now, the week ahead, going to be driven not totally by the Fed meeting, but you'll get some dialogue. We'll have a rate decision, and then get an idea in the Fed statement and in their press conference, kind of how they feel about where some inflationary pressures are pushing that side of the market. We'll look at some economic momentum slowing possibly a little bit for the markets. U.S. data coming out like labor market data, retail sale indicators, and some PMI numbers. Now, the major economic releases will be the core PCE. Now, that's the Fed's preferred inflation gauge, maybe setting the tone really for the market for next week for inflation. Earnings, big time. That's probably going to be really a big stress test here because we have about $16 trillion coming out with the mega cap tech earnings like Microsoft, Alphabet, Amazon, Meta, and Apple coming out, as I mentioned, kind of setting the tone here. So if we look at global central banks, they'll be in focus. And then we'll kind of wrap some things up with, always part of the headline, geopolitics and energy. Jeremy?
Well, thanks, Graham. We always appreciate the information and expertise, and thanking our listeners that check in with us every single week. And we look forward to seeing you guys next time. Have a great week.
Take care.